Welcome to the latest Motley Fool Scoreboard. I'm on in Chocolate Balloon. We've got longtime fools, Matt Frankel and Travis Hoyam, giving a 1 to 10 rating to a Moneyball wreck and a company that's long been in the foolish ecosystem. It's Dolby Laboratories, ticker symbol DLB. Rate the strength of Dolby's business, including factors like its industry and its competition. 10 is invincible, a 1 is hopeless. Matt's at an 8. Travis, you're turning it up to 9.
I've got to go 9 here. This is one of those companies that on the surface, you're like, how in the world do they continue to make money? But they're the dominant, basically tech platform in audio. They got something of a network effect because, suppliers, record labels are using them, the distributors, so Amazon, Apple, or some of their partners, everybody, they just sort of sit in the middle and collect mostly licensing fees from all of these companies. That's why you have incredible margins, which we'll talk about in just a second. But they're not going anywhere, even though this is something that is really valuable and everybody uses it all the time. So I love the businesses that are just going to keep printing money just for continuing to do what they do.
Yeah, I gave it 1 point lower at an 8. They are the leading name in audio technology. That's that's undisputable. The results lately have been decent despite a challenging environment. 6% earnings per share growth in the latest quarter. And the reason the environment's challenging, there's a lot of uncertainty surrounding movie theaters. Then the future of them and where they fit. There's still pandemic disruption going on. It hasn't really equilibrated yet. It does have excellent margins, as Travis mentioned, almost a 90% gross margin, which is because of all that licensing revenue, almost a 20% net margin. Great business, but just the uncertainty going forward, I gave it a point lower.
Those margins are unbelievable. For management, a 10 is Warren Buffett, a 1 is Homer Simpson, Matt's at a 6, Travis, you're at an 8.
Yeah, I usually like the companies that are disrupting established companies. The fact that Dolby has not been disrupted, I think, is really a testament to their current leadership. So that's why I went so high here. They've really leaned into the fact that they are a horizontal business model. Their job is to serve everybody on both the supplier and the customer side. They haven't tried to go into, or at least leaned into, making their own headphones and stuff like that, which is what you would think a lot of companies would do, or, making their own theater equipment. So I think just doing what they're doing it better year after year has been the right move. So that's why I went pretty high here.
Yeah, well, I gave it a 6, and Travis is absolutely correct. They haven't been disrupted by another company, but they have been disrupted by events, specifically the pandemic. Movie theaters are a big part of their business. The stock is roughly flat over the past 5 years, and that's the big reason why. It's because of all the movie theater disruption. Their sales spiked at the beginning of the pandemic as everyone bought home theater systems, but then everyone realized that that's not going to last forever, and movie theaters aren't really investing in new technology right now, even though box office revenue looks strong and that could change. I do like some of the strategic moves lately, especially around acquisitions. They acquired the IP portfolio from GE Aerospace, for example, and the CEO owns about 2% of the company. It's a pretty big stake for a non-founder CEO.
For financials, a 10 is a fortress, a 1 is yikes. Matt's at an 8, Travis, you're at a 9.
Yeah, we've already talked about 90% gross margin. Operating margin is hovering right around 20%. This is not a growth company. So if you're looking at Dolby, don't look at this as a company that's going to be growing in the double digits, have pretty low expectations, which we'll get to in a second. But I think it's just rock solid and not going anywhere.
Yeah, I mean, Travis just hit the nail on the head there. I gave it an 8, and the reason it wasn't a 9 is because they're not a growth company. The balance sheet is fantastically strong, great, about a 2% dividend yield that's well covered by the earnings. And if earnings growth and revenue growth it was a little bit higher, I might be a little bit better on financials, but it's not exciting, but it's strong.
Let's move on to valuation, Matt. How well will Dolby stock do over the next 5 years, and how safe is it? 10 is a sure thing, 1 is a lottery ticket.
Yeah, I said at 5 to 10% over the next 5 years with a safety score of 7. I am optimistic that the theater business will it'll grow modestly over the next few years. Box office revenue over the past couple of years has been better than expected for the most part. And the strong balance sheet and the brand name provides some margin of safety. So I said a 7 for that.
Yeah, and I went lower with the expectations and even the safety score. And that's just because of price. You can have two things here. You can have an absolutely rock solid business, a business that has put itself strategically in a really phenomenal position. But as an investor, if you're not getting growth, you got to pay the right price. 17 times forward earnings, more than I want to pay for a company like this. So that's why I set those expectations pretty low.
Thank you to both Travis and to Matt. They've given Dolby a solid overall score of 6.9 out of 10. For topics, Matt prefers SiriusXM and Travis prefers Spotify. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Salesforce. Till then, Fool on.